I am Kim Hughes, and thank you so much for joining me for the Sane Crypto Podcast. If you ask a traditional investment advisor about putting cryptocurrency in your investment portfolio, 99 times out of 100, they're going to advise against it. And 99 times out of 100, it isn't a rational, reasoned response. It is either a knee-jerk response about something that they haven't devoted the time to understand fully, or it is because they can't make any money off of it, because in order to invest in crypto assets, you have to move money out of the portfolio that they are getting paid a commission on, or both. It's a little bit like asking a surgeon about homeopathic remedies or a lawyer about do-it-yourself wills. And I know this because I spent over 20 years in the investment world. I cut my teeth as an options trader back in the late 90s, then moved on to financial engineering, and then building an award-winning registered investment advisor firm. Now, full disclosure, I am no longer any of those things, having sold my investment firm and retired at the age of 47, so I could move here to my farm in South Carolina to play polo, and I thought live happily ever after. That is until crypto came along. So I am probably one of the very, very few portfolio managers from the traditional investment space who believe that almost everyone should have a strategic allocation to crypto assets in your portfolio. And when I say I believe everyone, that includes us old fogies who are investing for retirement, baby boomers. Actually, especially us baby boomers investing for retirement. And on this show, I make the case for why, and hopefully give you some hype-free investment education as part of the bargain. Now, in today's episode, I'm going to tackle another question from the Ask Kim mailbag. This one comes from David, and he writes, nearing end of crypto assets, parentheses, thanks for recommendation, everyone needs to read, end parentheses. And they mention GBTC. Don't recall a podcast mention as yet. Too much of a premium to consider, ? Easy to get via the brokerage account. Statement, any period chart tracks my 4 crypto assets portfolio, which tells me premium has been relatively constant. So kind of a little cryptic email there. So I appreciate that question, David. Just a couple of housekeeping notes before I dive into the answer. So he mentioned the book Crypto Assets, which is by a former podcast guest, Jack Tater, and his co-author, Chris Berniski. I will include another link to that in the show notes in case you are interested in understanding. It is, at the moment, I would definitely call it sort of the definitive guide, the book, if you will, on crypto assets as a new asset class. And also, if you have a question like this one that you'd like me to answer, then you can always send that, and I encourage you to send it to askkim@sanecrypto.com. All right, so now back to the question at hand. I'm going to tackle this question in 4 parts. First of all, what is GBTC? For those of you who don't have any clue what we're talking about. Then we'll talk about the pros and the cons of GBTC, and then finally whether I think GBTC is a decent alternative to just owning Bitcoin itself. Because that really is he didn't ask the question specifically, but it wasn't phrased in terms of a question, but really, I think, that was the question. Is GBTC, should someone buy GBTC in lieu of or in addition to owning Bitcoin? Okay? All right, so we'll start with what is GBTC. GBTC is the ticker symbol for the Grayscale Bitcoin Investment Trust. But most of the time it's just referred to as its ticker symbol GBTC. Now, an investment trust is a company that owns a fixed amount of a given asset, which in this case, that asset is Bitcoin. And investors buy shares of the trust, which those shares are really they're a contract that represents ownership of the asset which is held in the trust. So in a gold trust, for example, one share of the trust might be worth like 1/10 of an ounce of gold. With the Bitcoin trust, the one share of GBTC is worth roughly 1/1000th of a Bitcoin. And to put some numbers to this, so as of March 31st, just to give you an idea, the GBTC, the Grayscale Bitcoin Investment Trust, held about 182,000 Bitcoins, and there were about 182 million shares of that trust outstanding. So that's how you get to the number. Each represents an ownership of about 0.001 or 1/1000th of a Bitcoin. And a trust, or this, in this case, the trust is managed by a company who charges a fee. In the case of GBTC, that company is Grayscale. Now, initially, all of Grayscale's investment trusts, because they have others for other crypto assets, were sold only to individual accredited investors here in the United States with very large minimum purchases and long lockup periods. But then, after a period of time, what they did is they listed the shares of the Bitcoin Investment Trust on an over-the-counter market, or OTC, also known as a secondary market, so that initial investors could sell their shares on the open market if they wanted to, and individual investors, even non-accredited investors, could buy them at a market price, very similar to buying a stock, where the price can float up and down based on supply and demand. And so again, just kind of to give you an example, today you can call up your stockbroker or go online to your brokerage account and buy a share of GBTC in the secondary market, the over-the-counter market, for about $14 US, right? And at the moment, GBTC is the only way you can buy and sell Bitcoin directly on the stock market. Although there have been many applications for a Bitcoin ETF, which undoubtedly will come someday, but so far, none of them have gotten the nod from the SEC. Okay, so GBTC is, for the moment, the only game in town in terms of direct investment in Bitcoin through a traditional stock trading account. So now that you know what it is, let's talk about the pros and the cons of owning GBTC compared to owning Bitcoin directly by opening a brokerage account at one of the crypto trading firms and then just buying the underlying asset and holding it yourself. First, the pros. The biggest advantage is, as we've already discussed, you can buy and sell GBTC through your existing brokerage account. There's no need for you to have to set up anything new, create new accounts, transfer money, none of those things, okay? Assuming that your brokerage firm supports the over-the-counter market, you can have that trade done in just minutes. So it's very familiar and very convenient. But more importantly, GBTC can also be bought and sold in your IRA at a traditional brokerage firm, okay? And this is big because to buy Bitcoin directly in an IRA requires opening what's known as a Bitcoin IRA with a special custodian, not the same one as the one at your brokerage firm. And these custodians have huge minimums and outrageous fees, and I do not recommend that route for now. But the biggest advantage of GBTC is it is an easy way to get direct exposure to Bitcoin, even in very, very small quantities. Like, you could buy 10 shares for $140, right? You can do that in your regular old retirement account, your traditional IRA, your Roth, etc. Okay. Now, the other major selling point of GBTC is that you don't have to worry about securing the Bitcoin like you do when you buy it directly. In fact, part of the fee that you pay to Grayscale is for making sure that all that Bitcoin is secure. For you, it's just a number, right? That appears next to a ticker symbol on your brokerage accounts, list of positions, just like your stock and your ETF positions. And so there's no need to do anything special. You don't have to secure it in a wallet, no risk of it getting hacked or losing it. To summarize, there's an article on Seeking Alpha titled Why GBTC is Better Than Bitcoin. They say, boiling all this down, the main reason is that investing in GBTC is investing in something that feels familiar. And that also means you can buy it easily through the normal channels and you can put it in the normal places. But before you rush out and start buying GBTC, there are some definite disadvantages as well, big ones. So let's start with the fees. There is a 2% annual fee on GBTC that you don't incur when you own Bitcoin directly. And that's a lot when you consider that the fee on the gold ETF, which is GLD, that's its ticker symbol, which is also, it's comparable because it's a commodity asset that also has to be physically managed. Their fee is only 0.4%. But, look, if that was all you paid, then it probably wouldn't be that big of a deal. In fact, it would probably be a pretty good deal. But the real issue is not that fee, it's the premium. Now, remember when I told you that today you could buy a share of GBTC for about $14? Okay, well, today, that $14 share only owns about $8 worth of Bitcoin. Okay, $8 And the difference between those two numbers is the premium you pay for owning GBTC instead of Bitcoin directly. Historically, on the average day, shares of GBTC close at a price which is 42% higher than the underlying value of their Bitcoin, which is roughly where it is today, 14 versus 8. And this premium has been as high as 132% in May of 2017 and as low as minus 0.1% in October of 2015. So it fluctuates a lot from day to day. Yes, the average is 42, but plus or minus a very big swing, right, on any given day. So what this means is, if instead of buying Bitcoin investment trust, GBTC, you use the exact same amount of cash to buy Bitcoin directly on a cryptocurrency exchange like, say, GDAX or Coinbase or Gemini, you'd get 42% more Bitcoin for your money on average. And your investment would follow Bitcoin's price perfectly because you own Bitcoin. You see, unlike ETFs that you may be used to if you're a traditional investor, which almost perfectly mimic the price of gold, say, or the S&P 500 in the case of spiders, SPY is their symbol. GBTC does not mimic the price of Bitcoin, not even close. In fact, on roughly 1 out of every 3 trading days, Bitcoin and GBTC actually moved in opposite directions. Meaning when the price of Bitcoin increased, the trust's price increased only 66.5% of the time. And when the price of Bitcoin itself decreased, the trust's price decreased only 68.8% of the time. In fact, if you look right now today on the Grayscale website, you'll see that for the 3-month period just ended, the price of GBTC's Bitcoin holdings went up 6.55% on the open market, but the market price of GBTC itself went down 1.67%. So, right? How can this happen, you might ask, when the only asset in this thing is Bitcoin? It's not like there's, why wouldn't it just mimic the price of the underlying as it's intended? And the answer is supply and demand. The supply of GBTC shares is relatively constant, but the demand for those shares swings wildly, as we know. In an article titled "Why Bitcoin Investment Trust is a Bad Investment," different article, this author says, it's safe to say that Bitcoin Investment Trust is likely to outperform Bitcoin itself when investors pile in and underperform Bitcoin when investors flee from its shares. It tends to overshoot both up and down, rising more than Bitcoin when the digital currency soars in value and falling faster than Bitcoin when it declines in value. Okay. So as if overpaying isn't bad enough, I believe it's completely reasonable and expected that premium, that 42% that you pay on average on any given day, is going to eventually evaporate, and evaporate quickly as soon as there is more competition in this market, which means that you are taking a risk here. It's not just you're overpaying. You could be risking a pretty steep haircut, right? Unrelated to the underlying fundamentals where that premium went away and is now suddenly approximating the underlying asset as it should. And that's a risk, okay? It's a big risk. And then finally, this is rather a minuscule consideration at least in my personal calculus, but Bitcoin does create, in my opinion, a little bit of a hedge against the doo-doo hitting the fan, okay? And what I mean by that is we have seen that already play out in a number of countries, including Zimbabwe and Venezuela and Argentina, where people switch to Bitcoin when their currency becomes worthless. Okay. Now, as a derivative, GBTC gives you no access to that underlying asset. You can't use it to buy chickens and eggs and milk. Okay. Bitcoin does, GBTC doesn't. You can't spend GBTC, you have to convert it into fiat, right? And yes, if things get hairy, the price may go up, but that won't do you any good if you're standing on top of your house with a flamethrower like Mad Max fending off your pillaging neighbors, okay? So, again, if you believe that we are headed for some sort of epic global crisis, then this might be a bigger consideration for you than it is for me. Peter Thiel, talks about, who owns millions, hundreds of millions of dollars of Bitcoin, talks about that is, in fact, what, kind of a icing on the cake for him. Not for me, but just thought I'd put it out there, okay? So with all that said, do I think that GBTC is a viable alternative to Bitcoin? And I would say my answer is viable, yes, preferable, no. Just so you know, I own GBTC. I own it in my IRA. And the reason I own it is because for my husband and I, that is where the vast majority of our investment funds are, by far, right? But I definitely prefer, for now, to own crypto assets directly when I can, because of that premium. I mean, 42% on average is just a pretty big hill to climb. And, frankly, okay, so back up. But I'm doing it because basically I don't have a lot of choices. I own some Bitcoin outside of my IRA, but relative to my GBTC holdings, it's not anything. Okay. And so if this was a traditional investment, with traditional upside, 8% on average for the US stock market, for example, no, I wouldn't even consider it. Okay. That would be 2% fees and 42% premium. Like, that would be lunacy. You would never do that. However, because this is Pascal's wager, which if you haven't heard me talking about that, go back and listen to some of the older podcast episodes, especially and including the one on the case for Bitcoin in your retirement portfolio, where I talk about Pascal's wager at some length. So because this is Pascal's wager, where we're making a bet on a huge upside, huge, right? That's the bet. If we are right, then a 42% premium is going to be, basically a rounding error. And I definitely won't mind having all those gains in my IRA where they are tax-free. That's my logic. And I also figure, okay, if we're wrong, we were going to invest the same 2% of investable assets anyway. So whether I lost it on Bitcoin only or Bitcoin plus premium, that won't really matter either, right? So I guess kind of on the one hand, I say, okay, I'm paying a 42% premium on average. But on the other hand, I would pay capital gains taxes, so I still think the advantage by far goes to owning Bitcoin directly, if you can, at least for now. But I would never tell somebody, don't buy GBTC if that's, if all the money you have to invest is in an IRA, for example. That wouldn't make any sense. So again, to summarize, viable, yes. Totally. Preferable, no. All right. And also, as with all things crypto, know that this may change, right? I could come on here 6 months from now and do a podcast episode where I tell you something completely different, because as the asset class evolves and grows up and competition heats up and that premium pulls in, then it may make perfect sense. Who knows? Okay. So was that helpful? I hope so. If it was, you could do me a great big favor in return, which is to leave this podcast a review on iTunes so we could crack the top 100 list for investing and get found by more people. I sure would appreciate that, because that is really the primary driver of that algorithm. So, I'll just leave it at that. Really would be helpful. Also, I want to let you know that if that piqued your interest and you'd like to learn more from me about Pascal's wager and investing in crypto assets and how to structure a crypto portfolio so that if we're wrong, we do no harm, but if we're right, it's potentially life-changing money, then I would encourage you to register for my free online training, which is called How a Little Bit of Bitcoin Can Make Your Retirement Savings Go a Lot Further. You can register for that at sanecrypto.com/webinar. And you will also find the full show notes for this episode at sanecrypto.com/podcast, with links to the crypto asset book, the articles that I mentioned, the statistics I quoted, and a bunch more. So again, the free online training is sanecrypto.com/webinar, and the show notes are at sanecrypto.com/podcast. And finally, if you have a question about today's topic or anything else, just email me at askkim@sanecrypto.com like David did. I read and answer every email personally, as well as answer some of them here on the show like I did today. And speaking of the show, everything I say on this show is for educational purposes only. Nothing should be considered investment advice. Past performance is no guarantee of future results. All investments involve risk, so do not, under any circumstances, invest money you can't afford to lose. That's it for me. I am Kim Hughes. I'll be back next week. And until then, may the crypto gods continue to smile on us all.